There we go. Testing 1, 2, 3. Yep. Seems like it's good to go now. All right. Well, guys, it's Wednesday. We are here on our third stream this week. So the third show that we've done this week. And it's FOMC day. We were just seeing old J Pal on stage. And look, we're coming up towards the end of the month as well. So, guys, fingers crossed that this stream hopefully goes a little bit better than the last one. I did make some tweaks to the setup, so hopefully it's a little bit more stable. Hopefully, I don't get booted out. I think I would have already been booted if it was going to give me problems. So, hopefully that means it's resolved. But yeah, let me pull up my screen really quickly, my trading view here, and then we'll try the market monkey today as well, because there's probably some interesting liquidity levels that we want to look at as well. Let's see here. But welcome, guys. Welcome to the show. If it's your first time, I go by Bits of Wealth, and you are tuning into another episode of these live Bitcoin and crypto market analysis shows that we do here on Wolf Bitcoin, a Wolf financial brand. And we do these a few times a week where we look at BTC. We like to pull up our charts. We like to look at the market from a chart analysis perspective. So, I think there's plenty of shows that are looking at the macro, that are looking at the news, that are looking at all the fundamental reasons of why the market moves the way it does. We like to look at the technical reasons just based on the chart here. So we're looking at all the same things I think that the macro shows are looking at, but we're just doing it through a chart analysis perspective. So we'll jump into some of that stuff. As usual, this is not any kind of financial advice or recommendation to buy or sell. Everything that we do on this show is just purely through the lens of education and entertainment. The things that I'm sharing up here are just solely my opinion, my perspective, my read on these things. We have zero interest in pushing any of these specific tickers, assets, vehicles, anything like that. We could be looking at a chart of weather patterns, a chart of Pokemon card sales, a chart of sneakers. Like, it wouldn't matter. We're going to look at it all through the same lens, which is the lens of technical chart analysis. So shout out to the sponsor, Public. You can check them out at public.com/wolf, but Public is an agentic brokerage. So they are moving right along, moving forward with the AI revolution and bringing that to investing and trading. So you can now use a few different AI solutions essentially within your portfolio. So whether you're trading long term, short term, you're doing stocks, bonds, crypto, options, you can use the AI on public to really, dial in a strategy and build a portfolio that's going to serve you for the long haul. And they are currently offering an uncapped 1% match if you transfer your portfolio from another brokerage over to public. So go check that out, public.com/wolf, WOLF, and start taking advantage of some of that incredible technology there. So while we're watching BTC here, we see that we've got a little bit of red already coming down. I think there was some pre FOMC selling that was already taking place. I think that's pretty clear to see on the chart. At this point, I'm really only seeing two big pushes that are taking place so far. This is potentially still the second one still in action. At some point, I suspect there's going to be a move up here roughly to this 50% of the previous week, and then possibly one more leg down. So I'll be watching for a move here below this previous week low. Again, we've talked about this on the last few spaces where this is a level to watch. Really, if we dip below it, it needs to be bought up quickly. We really don't want to see any kind of sustained price action and movement below that. We don't want to see a lot of acceptance of Bitcoin's price below this level. Ideally, this is a very quick move that is almost immediately bought up and sent back the other way. If this doesn't happen and we start to see we're hanging out here or we're going potentially lower, then I get a little more cautious for the potential that maybe the top is actually in, and the top front ran the FOMC event. So on front ran the end of the week and all of the other things that are on the calendar this week. So we'll be keeping an eye on that. If we don't get this move lower, look, I think if you don't get the move lower, we've talked about it over the last few days about a sweep of the highs. I still think that that's perfectly reasonable. I still think it's possible. I think, we'll be watching for it. If it were to take out this previous week low, if it were to trap below here, I think it gives it a little bit more fuel to get up there very, very quickly, and potentially maybe even to push a little bit harder to the upside. But it doesn't have to. We can kind of see this hang out here and then slowly turn around. But I think there's probably a bit more juice to it if we get a quick little move here below these lows, and then that's what sends us up higher. And then once we're above these highs, we can look for the same things we were already kind of looking to see, which is exhaustion. We're watching some of these key areas, these inefficiencies in the chart to the left. So we'll be watching some of that. We'll see if it plays out. We got Cade Bergman in the house. What's up, brother? So yeah, I mean, I think overall this was like a pretty tame FOMC market reaction. We really didn't see a whole lot of craziness happening here on the chart. But I mean, again, we have to look at this just through the lens of a few different things. Number one, we are quite close, not perfectly there yet, but we're quite close to the bottom of this previous range, 80,600. We came up just slightly below that. Again, we understand that a lot of times a prior floor, when it's lost as support from a technical analysis perspective, it can become a ceiling, right? What was once a floor becomes a ceiling. And then once, if this manages to get back above it, what was once a ceiling can become a floor once again, right? And kind of prop the price up a little bit. So we understand that that's certainly a possibility here, that this could be an area that's just simply going to be a little bit difficult to get through. So we're okay with that reality. We do also have a yearly open quite a bit above still. This is closer to 87, almost 88K. But there's a lot of inefficiency here in the chart, as you can see here by the lack of volume on this volume profile. It pretty much goes flat right at about where we are, right at about where we topped. And you don't really see any kind of volume come back in any meaningful way up until you're close to that yearly open anyway. So this whole thing here is just a big void, and there's absolutely no volume here present on that volume profile, which is really just telling us that Bitcoin does not trade very much inside of this zone. Participants either, when you're near the zone, the market either believes that Bitcoin is worth more, and therefore Bitcoin quickly accelerates through that to where the market deems is a fair price for it up here, or it'll reject from it and it'll stay down here where the market also believes is a more fair or appropriate value for Bitcoin. In here, not so much. That's kind of a way to read this volume profile. Is it's essentially just telling you that. It's telling you, where does the market like to trade? The market likes to trade up here. Market likes to trade down here. These are the two big areas where you see a lot of volume, right? So, I mean, we've talked about this on previous shows. We actually, I believe I've got a layout here. Here, we'll leave it on the weekly, but I know for a fact that we covered this probably a week ago. Where is it? No, that's not it. There it is. We covered this when talking about this big zone for BTC, which is that exact situation which I shared, right? So on a higher time frame, this is a weekly chart going back through March of 2024. We can see that when Bitcoin approaches this zone, this roughly like 72 to 82K zone, and sure, we can tighten that up. We could probably tighten it up and say it's closer to like 74 to maybe 80K or something like that. 75 to 80K is probably a better, if you wanted to get really, really precise as to where that zone is, it's in there. You could also argue that there's probably two smaller zones, that there's a zone here on the bottom side, right? You could argue that there's a zone roughly here. And then you can also say that there's another zone slightly above, about there, above as well here. But the truth is, it's easier just to, for me at least, I like to just look at it as a wider zone. So 72 to 82 is kind of what I see it as. And essentially what we're seeing is that Bitcoin, again, this zone either repels or Bitcoin has to get through it quickly. But we can see here that you had quite a few rejections back in 2024 from this zone on the higher time frame, where you just had a failure to get above here, right? A failure to get through the zone, failure to get through the zone, failure to get through the zone. And here you were finally able to get through it, but you had to get through it quickly with some speed. You weren't just going to casually just take the stairs up. To get through this, you needed to take like the slingshot ride at the fair or whatever that is, that just throws you out into outer space basically. And you were able to get above it. And then once you were above it, the zone again continued doing what it typically does, which is it rejects. It rejects price. It rejects price. So as price came down, nope, rejected. Tried again, nope, rejected. Why? Because this is a zone that price does not like to trade at, right? It's repelled by it. And the only way you get through it is if you're going to go through it quickly with this little rocket ship with some speed. So we saw that back here. This was last year, March and April of 2025, where it came down. And same thing, you got rejections from that zone. Then you can see back here in end of 2025, we came down and again rejected from it initially, right? So your initial reaction here is to reject. And price was ultimately able to get back through the zone, but it had to do it with the little rocket ship. It had to quickly get through it. It is not a slow grind through. It is a very fast, impulsive move through the zone when it's ready to go through the zone. Once below the zone, again, what happened? It resumed its previous character, which is to continue rejecting. So the question has been, are we getting a rejection again here this time? Is this time doing the same thing that it's done every other time, which is that unless you're going to go through this with any kind of actual volume, any kind of real momentum behind it, you're more likely to reject from that? And that has been the question we've been asking. That's been our thesis, has been essentially that, look, if this thing doesn't get some type of catalyst to really push you up through this thing, probably closer to the yearly open, maybe even slightly above, there's a very small chance and a very low likelihood that you're going to see this just casually walk up and grind its way through that. It's not in line with Bitcoin's behavior around this zone. It's just not. There's no evidence on the chart to suggest that. There is evidence on the chart, though, however, to suggest that this zone likes to reject price from either side, whether from coming down into it from above or coming up into it from below. It likes to reject price unless you're coming in with the rocket boosters. You're coming in with some type of real momentum, some type of real speed behind you to push through it quickly, whether to the upside or to the downside. So I don't think this time is going to be any different. I believe this time should be pretty in line with the character of the chart. It should be pretty in line with the evidence that historically we've seen here. And so even though we've pushed a little bit higher than we have previously, you could have said the same thing about this. These pushes down into it actually went pretty deep into the zone. They actually went significantly through the zone here. Let's actually grab a quick little. So you had about a move. Hold on, let me do it another way. Let's see if we can do it this way, a little wider so we can see it. Yeah, so some of these pushes were actually going in 65 to 70%. Maybe even some of this was actually 80%, closer to an 80% push into the zone, as opposed to some of the other lighter touches, which only really went in about 20% or something like that. So let's just keep watching this here. This, like currently, if we were to measure the current movement through the zone, we would say that we're probably about the same. We're probably about 70 to 80% through it. So here, yeah, you're actually about 65 to 70% through here on this last rejection. So it is worth watching this. Could be getting a similar rejection as we did here with two deep pushes into the zone. We could still have one more deep push into the zone here before we reject and this rolls over. So let's keep an eye on it. Or we come down, correct a little bit, and then we get a very impulsive move through. But it has to be either or. I think either way, it's, based on the evidence we have here, either this is going to offer us a rejection because we don't have enough speed, or we will come back into this and through this with some kind of actual momentum to really push through here. So those are the two scenarios that I'm really eyeing right now in terms of BTC on the higher time frame. Again, we've said there is still room to the upside. There is this 80,600, and if you're a fib trader, there are some fib levels here that you can look at. One sec. Now let's just do that one. Yeah. So if you're looking at these levels, let me swap this over to a standard fib retracement. Nope, that didn't work. Let's do it this way. I don't know why it's not on there. And let's change this to fib retracement. Okay. So if we're looking at this here, essentially this move, if we're measuring off of here, off of that last little hitch before we broke down, and then you grab it off of the low, essentially we had a golden pocket retracement, right? You pulled back 618 to 65 here on this move, and you could be coming down now. Now, if you're to measure this off of the absolute high, off of the last swing high up here, golden pocket does still leave a little bit of room to the upside. So if instead we grab this fib off of the absolute high of the previous range to the low of the current range, right? So we're essentially measuring a retracement of this entire move down here. This is now retraced. We're about 50% of that move that we've gone back up. And there is still easily another 7 to almost 10%, 7 to 9.5% to the upside that we could see. So look, if this is just coming here and it's getting a little bit of fuel to go higher, we could still see a move that pushes up into here. Notice this is also where we have this big red vector candle here. So this is an unclaimed vector here, right? Notice the solid red coloring on that candle. So you do have an unclaimed vector here. We could see this push up here either over the weekend or in the coming days, maybe even into next week. And then subsequently that could be the top. If this is not it, that could be what then starts to head lower, and then we'll have to watch as we're going down what kind of speed this thing has to the downside. Now, if this is going to, again, if this is going to get through this 72 to 82 zone, I suspect that you would have to come down and you're going to need a fast move through it. You really are going to need some type of catalyst to push you through all of this, probably close to the yearly open. Initial rejection is likely up there on that first touch. You're likely to get rejected. But if you can get high enough and if you can get some speed there on the pullback, you should be able to stay above this area here, this 72 to 82. And if you can stay above that, even if you were to chop around a little bit here, ultimately, I do think it makes sense that you kind of consolidate up here, and then that's what gives you that next push up. So there's your kind of bull case, bear case. What's up, Darren? How's it going? There's your bull case and bear case for how this can move. This zone, again, this overhead zone, this area, the type of acceptance the price can get or fail to get in that zone as we move up into it, I think that's going to be the most telling sign. Everything else is just speculating. I'm speculating as to how it might move if it's going to go higher. And then I'm speculating as to how it might move if it's not going to go higher, if it's actually just going to come down here for a final push up and then ultimately fail and then come down and give us a true breakdown, right? So something like this could still happen. This is still very much possible that you could be getting something like this, and then you head back up here only to just be rejected heavily from a move higher like that and just not find any kind of real acceptance up there. So totally possible. Clean that up a little bit. Could do something like that. And then you break down, you head quite a bit lower. Probably this would probably come back up like that, try and give one last lower high there, and then you'd probably get that failure. So these electrolytes, oh my God. But those are my thoughts, guys, for BTC in the current zone. That's kind of how I'm thinking about it. If you've been following along with these shows, if you've been following along with the Trader Talk Spaces, this shouldn't really be a surprise. It's pretty in line with how we've broken down this zone and some of the key areas and key levels that we're watching. So, but yeah, let's see what happens here. BTC currently, again, like let's observe, paying very close attention to these lows. So here below below 74K is really where you have to start paying attention. Below 74, and I would say above 72. So 72 to 74 is somewhat in line with where you're watching for a potential bottoming structure, it to pick up a little bit of liquidity. A little bit of liquidity, and then make an attempt to push back up towards the highs, maybe even a little bit above the highs. So could be a fun little play. I do think we have to be very cautious about that push up, unless we just see some plain undeniable, clear as day, bullish momentum, just massive momentum. And again, I think that momentum would need to almost be, what in crypto we call this God candle, up to close to the yearly open, if not exactly to the yearly open. Let's throw on this. Let's throw on these volume weighted averages as well, real quick, because these VWAPs, I know we have some overhead levels as well. So the 6-month rolling is actually right here at 81 and change, right above this 80,600 level. Right. So we talked about this level here, previous range low. That's right above us there, yearly open, and then the 12-month rolling VWAP is actually quite a bit above that yearly open, up at 94. Wouldn't that be something, huh? Wouldn't that be something? Yeah, push all the way up there. I think 94 is doable, but again, I think it's going to look similar to that example I gave, which is like you got to come down, maybe spend a little bit of time here, building up some strength. Then you push up, probably close to the yearly open. I think you'd have to get really, really close. And then chances are initial rejection. You come down, probably, you know, re what are what's the, like, recoup, gather yourself, right? Build up some strength for a little bit, and then maybe something like that could then give you a move higher. But I think you'd have to spend a little bit of time up here trying to get back above that yearly open, just kind of chopping between, at least between the 6 month and the yearly, but probably even just somewhere in this upper end of the zone here. Salty likes it. Salty likes it. So we'll see. We'll see what we get. I don't know what we're gonna get. I don't have a crystal ball. I don't know what we're gonna get. This, and that's the thing about technical analysis. I think a lot of people have an expectation that TA is going to tell you, like, that there's a form of TA that tells you what's absolutely going to happen, um, without any kind of, any kind of loss of clarity, or lack of clarity, should I say, actually. Like, that you should have just this perfect understanding of what's going to happen next. And it's not true. TA is just probabilities. Technical analysis is really just trying to give yourself an edge over most people who don't understand this type of stuff. There's other things that are still relevant, that could give you even more of an edge, right? Like understanding order flow, knowing how to read the order book, and understanding bid versus ask, understanding auction market dynamics and that theory of that. Um, I would even throw in there, like, understanding the macro environment, geopolitical, all that stuff gives you an edge as well. So the more you know, the more you can combine. I'm more of a specialist, brain-minded kind of guy, where it's like I really want to get good at one thing instead of being like the jack of all trades and knowing enough about everything. And part of that is I just don't know if I have the mental capacity to do that. Like, I don't know that I'm that big brained. You know what I mean? I'm a sharp guy. I know what my skills are. I know that I'm a quick study and I learn things, but I also just want to get really good at one thing. I want to be subject matter expert. I want to be specialist. I want to be, just highly refined in one skill set. And for me, that's what I focused on here with these charts. Is I really just want to get a really good edge of how do we read this price action, and how do I extract some value from that, and maybe gain a little bit of an edge, you know? So that's just how I'm choosing to look at that, is through that lens. Here, let me turn on. There we go. Got a little bit of background music. Super low. Shouldn't be distracting. Let me know if it is. By the way, guys, if you're watching this, and if you have not already, if you would be so kind, it's not asking too much, if you could give us a like, a repost, drop a comment, drop a message in the chat. Just let me know, let the Wolf team know, let our sponsor, Public, know that you guys are tuning into this, that you guys are paying attention, that you're watching, that these shows are valuable, that they're entertaining, that they're educational, that there's some type of value that we're providing to the space, some type of value that you guys are receiving from these. And it gives us feedback. It lets us know that we should continue producing and creating more of this content, and that we should continue, leaning into it, and investing into this, our time, resources, energy. That we should continue to scale these types of things, create more content around it, clip them, all the other things we need to do to grow this type of content. So, bear markets are for building. Bear markets are for building. This is a bear year. It's a year of growth. It's a year of development. But with that, certainly appreciate feedback from you guys. We love when you guys are here with us live. engaging, asking questions, commenting, um, just hanging with us, just like you guys do on the Trader Talk Spaces, like you do on the other shows. Yeah, what an incredible community. Super supportive, great community that's built here. So we appreciate all of that. So if you feel the same way, just quick little like, follow, thumbs up, repost, all that good stuff goes a long way. Goes a long way. Cool. So that about covers BTC. In terms of stablecoin and how that might look, stablecoin's actually kind of given us the play already. So see, stablecoin's kind of already given us the setup. It's showing us what's possible here. This is already kind of showing us that a sweep here is likely coming. So we're probably looking for a sweep, and then we're looking for that move lower. Remember that this is, if you zoom in enough, stablecoin is basically just an inverse of Bitcoin. So this is telling us already stablecoin is very close to sweeping these lows here, whereas Bitcoin is not quite there yet. And has this low that's coming up, but really the key lows for Bitcoin are down here. It's not quite there yet. So Bitcoin actually has to make a little bit of a move. It's got to make a couple percent to the downside. Yeah, 2.5%, almost 3% to the downside to really sweep some of these key levels. Stablecoin is basically there. Where's let me see if I can pull previous week. Yeah, see, it's right here. So previous week for stablecoin is already just there. It's already there. So I think that I feel like this is giving us the roadmap. It's actually signaling. It's there's a word for this. You're telegraphing is the word I was looking for. It feels like stablecoin dominance is telegraphing a little bit what we might be expecting here for Bitcoin and for the broader crypto market. It's kind of telegraphing. It's telegraphing the move, if you will. If you guys are fans of MMA, combat sports, martial arts, all that type of stuff, that's actually a term that's very common in that, which is you telegraph. You're going to go in for a kick, or you're going to go in for a punch. Sometimes it's your eyes will give it away. Sometimes it's like you change your footing. You change your footing a little bit. You change your hand placement a little bit. The way you move your hips, you start to rotate your hips a little bit. All of those things can kind of telegraph that you're about to do something. This is why I actually like the pair charts, and I like to look at not just Bitcoin alone, but I'll look at Bitcoin against gold, Bitcoin against equities. I'll look at stablecoin dominance, because sometimes those things will telegraph the move before it comes, right? So you kind of see that a little bit. I think we're kind of seeing something like that here. Anon says possible if it holds, say 70.5, could be forming a new range up to 79.4, even though I think it is chopped until much lower. Yeah, I can see that playing out as well. I can see that as well. 79.4, is that what you said? 79.4? 79.4, yeah. So 79.4. Yeah, I mean, you're basically calling for it to come back up here, just kind of to you're basically calling this like the new range, like that it could just hang out here. And it could. I mean, we're going into today's Wednesday, we're going into Thursday, Friday. Maybe, yeah, maybe you get something like this that just either slightly goes above it and doesn't quite front run it, and then maybe comes there. And then at some point, you're either going to get the break, to sweep to the downside for the move higher. Like you would either get that, or if it doesn't, you might also get the sweep to the upside, right? For the move lower at some point. But you could spend a couple more days here. I mean, heck, you could spend the weekend hanging out up here. Again, we don't really know, but let's say Bitcoin spends and just kind of slowly expands the range out a little bit over the weekend. During this time, alts are likely to continue running while Bitcoin is kind of doing this. I think your alts are going to continue running. You're going to continue to see a list of these that are putting in gains like this, like AI. Look at that, right? Just kind of random, hard to predict, hard to get in front of, unless you just happen to get lucky or you're watching them very, very attentively. But some of these are just going to continue popping. This one actually looks right here like it might be getting audio. Yeah, audio had a nice little pullback. Audio is probably going to put in a leg. Like some of these, they're probably going to put in moves higher, especially if Bitcoin just kind of hangs out at the top of this range for a few days. And it can be a slightly expanding range. Every little push up can go a little bit higher. Every little push down can go a little bit lower without it really breaking out. And during this whole time, you're just kind of chopping people up because you got people going at the high, they're going long, at the low, they're going short. And it's just chopping everyone up that's trying to trade this thing. Alts do their alt shenanigans. And then ultimately, to start the week next week, we get the false move in one direction, and then you ultimately go the other way, whether up or down. Totally possible. Totally possible. A little bit of cold coffee. A little bit of cold coffee. Guys, I am so congested right now, too. I've been popping these allergy meds, but I get bad, like seasonal allergies, especially when the wind starts picking up and all that crap in the air starts blowing everywhere. Woo! It's bad. It's bad, bad, bad. So I got to be on either some form of Claritin or what's that other one? Zyrtec. One of those to be able to breathe. To be able to breathe. It's very, very annoying. Oh my gosh. So this is what we got to watch for, guys. We just got to watch this, observe it over here. It is worth noting, and I think I talked about this yesterday, that we are still, like, you really could, you could argue that we're still holding above previous range, that we're kind of establishing some price acceptance above these previous highs, that this was actually a flip of structure here, and that we've maintained above that. Like I could see that side of the argument. And that would support what Anand just said, which is like this ranging action here that ultimately maybe you dip, fake out below that, and then you get something like that. Or you could also get the opposite of that, which is it kind of sits here, fake out to the top side, comes back inside this one, and then tries to go back across, and then we'll have to see it either faking out to the downside or it's actually going to come back in previous range. So one really easy thing that you can do here now with the current price action as well is you could put a channel on this. You could put a channel on this, connecting that high with this previous high, grabbing those lows there. I'm trying to see. Nah, just do it off that top one. But you could do something like this as well. And then again, look, this even adds confluence to what we were just saying. What really is going to matter is not losing the midline of the channel, which happens to align perfect with this horizontal, right? That aligns with that as well. So essentially, even if this comes down here, you kind of don't want to see it really lose that. You want to see it, if it's going to go higher, you want to see it do that. If you lose the midline of the channel, right, if this comes down and then it comes down and does something like this, that is no bueno. You're more than likely coming to the bottom of the channel. And even then, though, even a move down here is not necessarily bearish, because even a move down there is still just giving you higher lows. Still just giving you higher lows. And the larger channel anyways continues trending up. So even if this came down here, did this for a while, you still could get that. Right? Enrique, what's up, man? Welcome. Long message. 80 to 86 is upside. Point of interest after defaults. 174K pull target 50K is low 60, but waiting for 50K no. Yeah, I don't know how truthfully they're actually waiting for a 50K fill. I think most people would take it given the chance, right? To buy at 70 price is 10,000. I want to fit again. Yeah, I mean, no, the truth is no one really knows. Like it doesn't matter how much money you have. It doesn't matter how much success you've had in the market. It doesn't matter how many times you've called the top or a bottom. None of that really matters. No one knows. No one knows. Anyone telling you anything other than that, which is the truth that nobody really, truly, fully knows, they're lying to you. Because there's no way to know. It's a live auction. There's no way to know. Right? Like we have there's probabilities, there's likelihoods, there's things that are more likely to happen than others, but there's no guarantees in any of this. It's all speculation. It's all speculation. These are speculative markets. People are speculating in both directions. Whether you're looking at technicals, whether you're looking at fundamentals, you're still just speculating at the end of the day. It's really all you're doing. You're just speculating. But I do like this little channel setup. I'm going to probably save that one. I had a channel before, but I want to say that the other channel was maybe a little bit wider. Yeah. There you go. The other channel, so it looks like what it was with the old one is you have a few pushes outside of that, which is fine. The downside, you've got a couple wicks to the downside. So it's more the original channel that I have captures most of the move, like the bodies and most of the action, with a couple, these are like your 1% moves that go outside. But same thing, right? Same thing. We're still we're worried about here. We're worried about the intersection here between this horizontal zone and the diagonal channel median. Those are the primary areas that we're watching here. And then look, this all really continues to tie into hide some of this stuff. Hide. This all continues to tie into the other observation that I had made and shared, which is that something like this is still very, very much possible. Still very much possible that this is what we're actually seeing play out. It's too early to tell for sure. When I posted this, there were a few people that were kind of mocking and saying that it's not the same, but it's close enough. It's close enough. So far, this is still looking pretty possible. Pretty possible. If we break down, you start seeing this kind of pick up some speed to the downside, moving away from kind of like this rounded support, then maybe that was it. Especially if you're back below the EMAs. You notice down here, right, back when it really got that closure below the EMAs, you had a couple bearish retests and then it was over. Here, you're still above the EMAs. But if we get a big move that closes below them and then you start seeing that we're retesting those EMAs as resistance, it's probably over. You saw the same thing up here? Above the EMAs, as soon as you got that closure below EMA, rejection off the EMAs back here, right? See? So here's your breakdown candle, bearish retest. It was over. Here, breakdown. Here's your breakdown candle, bearish retest. Oops, I missed that one. There it is. It was over. So if we see the same thing here, this chops around and then eventually it breaks, at some point over here, you get a break below the EMAs. The EMAs stay kind of curled up here like this. Those are your EMAs. This candle breaks down. You come up, you tag it a couple times as bearish retest. It's probably over. It's probably going lower. History isn't perfectly repeating, but it rhymes. There's a lot of things on the charts that are very, very similar to how it's behaved in the past. Same thing here. You saw higher lows, higher highs, broke down. Higher lows, higher highs, broke down. Higher lows, higher highs. I don't know. You had two key horizontal resistance areas to tag. Tag the first one, rolled over. Here you had two areas, previous range low, current range high, previous range low, same as this. Tag the first one, rolled over, didn't touch the second one. Same thing over here, current range high, previous range high, low, same thing. Tag the first one, rolled over. I don't know. I don't know. I'm just pointing out some interesting facts on the chart. You know, but I do think, going back to that comment, I do think that, if Grant and Gary are talking about wanting to fill at 50K, I think that's the right attitude. You shouldn't be, instead of getting mad when you get lower prices, I think you need to have an action plan. So I think that they're spot on. If they think that there's a chance that price goes lower, even if they think it's low probability, they have a plan in case it does. And it sounds like their plan is to buy at a discount price if they are given that opportunity. So that's the smart thing to do is, no one really knows perfectly what's going to happen, but I think you need to have a plan. You need to have a plan, and you need to not fear discounts in the market. You don't need to fear price going lower. You just need to recognize it for what it is, which is it's an opportunity. When price goes lower, it's an opportunity. As long as the underlying instrument that you're investing in is still something healthy, doing what it said it's supposed to do, nothing's changed, right? Obviously, if something's going down because the founders were caught stealing money, or the company was defrauding investors, or you may not want to you may not want to get in front of that dip. Like that may not be the dip you want to buy, right? Because there could be something broken there, right? That's just common sense. Like, you don't have to be a licensed financial advisor to understand that. If price is going down because something changed in the underlying asset, security, vehicle, whatever it is, something changed and it's no longer offering the value that you were initially perceiving, that is different. But if the technology hasn't changed, if the value prop hasn't changed, if it's still doing the same thing it did yesterday, if all systems are still working, uptime is perfect, like nothing has changed, the market is just pricing it lower for some reason, there could be an opportunity there. That's all I'm saying. But this is where you have to have your own plan. You have to have done your own research. You have to understand your own risk tolerance. You have to understand everything about your personal investment profile, who you are as an investor, as a trader, what kind of risk tolerance you have, all that stuff. And you need to have those plans built to maximize and take advantage of the volatility in the market. Makes sense. I guess we're gonna wrap it there, guys. Good news is I think we solved whatever that StreamYard issue was. I want to say I think we solved it. We've not had a single jitter, not a single issue. I didn't get booted. Screen stayed up the whole time. Seems to have resolved. So I guess I did some updates on the system right before the stream. That's why we started about an hour later, is I had to do some updates, do a reboot, reconfigure some stuff. But it looks like we got it sorted out. So hopefully that means that we're going to have a great rest of the week in terms of streams. And, next week we should be, fingers crossed, knock on wood, we should be set. We should be perfectly set. Rika says, would be nice if we chop up here a bit. I need the short. Yeah, look, there'll be plenty of opportunity either way, man, whichever way it wants to go. So, but yeah, let's see. Again, the best short is going to be on a move higher. Best longs are on moves lower. Pretty simple to understand that, right? So, So let's see. Don't get caught up in, I think you got to be careful. Don't get too caught up in chasing price. Understand, like, for example, here's like, let me just share, right? Like, I'm looking for a move down near these lows. So if I don't see a move down here, which is where I want to be longing, I'm gonna take the time to go do something else. I'm not gonna be watching this like a hawk here, waiting to see if it reverses. I want to long it from down here. I'll either set a horizontal alert, I'll put alert on this box, and that way it can text me, email me, whatever it's gonna do when price moves down into the area that I'm interested in taking a trade. That, or I just set some trades down here that are gonna trigger when price moves down here, right? But I think the trap that we make is we say, yeah, you know what? If it comes down here, I wanna take a long, right? If this thing were to sweep down, I'm gonna take a long if it comes down here, because I want to capture, boom, like something like that. And then what happens is this starts to go up instead of coming straight down. Like, this starts to turn around a little bit here, even though you already knew there was a possibility that this was going to come up. You knew that the 50% of the previous week was somewhere around up here, right? There it is. I just populated it. You knew that 50% is somewhere up here. You know that your EMAs are up here, but you start seeing a little bit of green on the 15-minute or on the 5-minute. You start seeing a little bit of green and you start feeling FOMO. You start saying, uh-oh, what if that was the bottom and we're getting ready to go to 126K or higher, right? This is what you do. You knew that this could pump up and that ultimately it could still come down, and you want to enter lower. You know that you want to enter lower, but you're sitting here, you start seeing this and you start to feel that FOMO. You start saying, oh man, what if that's it? We got 126 coming next. I might wake up tomorrow and this baby's at 90K. Oh, I know that I said I wasn't going to trade unless it came down here. I know that I said that there was a pretty good chance that this could still come up and it's probably going to reject and give me an entry down here. I know I said that. I know we drew it on the chart. I knew we outlined it. I knew it was not an emotional decision. It was based on data. But now I'm feeling the FOMO. Emotions are taking over. I'm feeling the FOMO. I think I'm going to start longing here. I'm going to take a stab at it, and it goes up, comes down, stops you out, and then it starts going up, and you're like, I got stopped out. And then this thing starts going back up, and you're like, I think it's going higher. You know what? I'm going to jump in on a long. I'm going to put my stop under here. And then it just comes back down and stops you out again. And ultimately, it can do this and then go to the area that you said you were waiting for anyways. And now you have been just beaten up in that process. You've been beaten up on the way down here. You've lost some money. You've got less trading capital to play with. And it does the exact setup that you said you were waiting for. Why? Because you couldn't stick to your plan. Because you got emotional. You were too up in the charts. You didn't step away. You didn't allow time to do its thing. The one thing we can't control, time. You didn't allow it to do its thing. You didn't stick to your plan, and your plan would have been great. Would have been exactly what you needed. So just keep that in mind. Know your levels and then walk away. Go do something else. Know where you're willing to play and where you're not. There's always another trade coming. There's always another setup. There's always another coin. There's always another opportunity. Just develop that discipline to stick to what you know you're willing to play and say no to what you're not. Period. Guys, with that, I'm going to jump off. Shout out once again to Public. Go check them out, public.com/wolf. Get started. If you've got a brokerage account somewhere else, they're offering a 1% uncapped match if you're willing to come over to Public and transfer some of that port over. So if that sounds like something that you're interested, go check them out, public.com/wolf, and start using some of these AI tools that are available to you that can be now, you can now be having these agents make some decisions for you, and really do some stuff while you're away, while you're asleep, while you're doing something else, So with that, guys, appreciate you all. Thank you for jumping on. We'll be back tomorrow at this time, I believe. yeah, so I believe tomorrow's show starts at this time. So we'll be back at 4 p.m. Eastern tomorrow with another one of these streams. Hopefully by then we've maybe come down, grab some long liquidity, and we're possibly looking at some long setups. We'll see if we can get that by tomorrow's show. If not, we'll get an update as to how that's looking. We'll also be back tomorrow about midday with some Trader Talk shows. There's an RWA show tomorrow as well. And I do believe tonight, if you're going to be around, if you're sticking around, if you're looking for more content, I do believe tonight. What time is this? At 7:30 p.m. tonight, 7:30 p.m. Eastern. There is another macro BTC ETFs show covering a bunch of that other side of finance. So if you want to tune into that, go check it out. More information on the Wolf Bitcoin account page. So with that, guys, peace. Appreciate y'all. We'll see you on the next show. Bye for now.